All right, everyone. Thank you for joining us for another edition of our Franchise Your Business podcast and webinar series. My name's Tom Dufour. I'm the founder and CEO of Big Sky Franchise Team. And this session is always a fun session. This is our current franchise sales and marketing trend session. And if you've been with us for a while, we've been doing this for probably about 3 years or so, maybe a little bit longer. And the last few months have just been gotten away from me. So sorry for missing the last couple months here. If you've been missing me, well, here we are. We're back. I think our last session was maybe 2 or 3 months ago. So looking forward to get going on this. Thank you all for tuning in here. And what we'll do, if you're new to us here or just looking for an overview, Big Sky Franchise Team, we help companies franchise their business, and we work with existing franchisors to help them expand and solve some of their market needs or market challenges that they're facing. And then this session here in particular, we take a look at some broad economic data and then help give us a sense of what in the world's going on in the in the broad business world to see how that might be impacting franchising. And even if we can't discern or tell exactly how it's impacting franchising, well, then maybe we can at least have the knowledge to understand that maybe some of these things are concerns or some fears of potential franchise buyers. And this could very well be on the hearts and minds of some of the franchisees in your franchise system. So let's go ahead. I will share my screen. And for this session, I tend to do a pretty quick rapid fire here to go through this. So we'll just go ahead and get going. If you're joining us live, please feel free to ask any questions, and you can feel free to share this once we repost it. So the first reports we like to dig into and go through are from the Institute for Supply Management. They have 3 reports. If you're looking at my screen here, there is the manufacturing PMI, the services PMI, and the hospital PMI. We'll take a look at each of these. So the first report we're going to take a look at is the Manufacturing Purchasing Managers Index, or manufacturing PMI. Now, this one was, this is from the, here we go. This is for April. This is showing April's numbers. And it says the U.S. manufacturing sector contracted in April for the second consecutive month after 2 months of expansion, preceded by 26 months of contraction. The manufacturing PMI registered 48.7%, 0.3 percentage point lower compared to the 49% reported in March. After reversing its recent momentum in March, the manufacturing PMI again registered below its reading in December. Of the 5 sub-indexes that directly factor into the PMI, 2, the supplier deliveries and inventories, were in expansion territory, the same as last month. So what I like to look at here is this is just taking a look at what is going on with purchasing managers, specifically in manufacturing. Are they getting more orders? Are more orders getting placed for products and purchases? And so what you can see here is we're below the line for the manufacturing break-even, which is at 50%, and the overall economy break-even line is 42.3%. I like to take a look at manufacturing because it tends to be a leading indicator. What I like to see in general is if you look at the last 6 months, just in general, it was much better than it had been really in about a year from a year ago from now. So while the trend is still below that 50%, if you were to add these up and average it out over the last 6 or 7 months, the trend does look like it's just ratcheting up, inching up just a little bit. You can see that trend line. It's pretty easy to see there. Okay, well, in general, what does this mean to me? This is kind of where we've been for several years now, which is we're just kind of hanging out. We're in this kind of middle spot. Okay, so let's take a look at the services PMI. Okay, and the U.S. is largely a services-driven economy in today's world. And this is a report, the services PMI. This one was written by Steve Miller. The manufacturing report was written by Timothy R. Fiore. And we have here we have in April, this is for the services PMI. It says in April, the services PMI registered 51.6%, a 0.8 percentage point increase compared to the March reading of 50.8. So this is good. If we just look at it 0.8%, it's an improvement. And it says, then it could get back to this paragraph. It says a reading above 50% indicates the services sector economy is generally expanding. Below 50% indicates it is generally contracting. A services PMI above 48.6% over time generally indicates an expansion of the overall economy. Therefore, the April services PMI indicates the overall economy is expanding for the 59th straight month. So we can see these numbers here, and it's in a positive territory, just over positive, but nonetheless, it's still positive. And then the third report here is the hospital PMI. This is their newest report. This one was written by Nancy Lemaster, and it says hospital PMI at 55%. I'm going to jump to the second paragraph, and it says the hospital PMI registered 55% in April, a 4 percentage point increase from the March reading of 51%. The business activity index remained in expansion territory for the sixth straight month. The new orders index expanded for the sixth consecutive month, and the employment index returned to expansion territory in April after 2 straight months in contraction. So as you look at this chart comparatively to the other two that we've seen, you can see that the hospital PMI is much more, there are much bigger jumps month to month and season to season. And personally, I think it's largely has some indication and impact based on seasonality of cold viruses and flus and things like that might be going through, and just an indication of what that might look like here. So if we take all three of these combined and we look at manufacturing at 48.7, services 51.6, and hospital at 55%, in general, it looks like if we were to, it is tipping the scale into a positive direction, but it looks like it's tipping it just slightly. So to me, what I can take from this is that overall the economy is neutral, or it's moving along. And so for prospects that you might be bumping into, to me, what this says is that likely the economy is going to stay kind of right about where it is and has been for the last little bit. And same for your franchisees, what to expect and what's going on. I think that this is just an interesting, some interesting data to look at to show that probably a bit more of the same of what we've typically seen the last couple years. All right, next up is the unemployment rate. This is from the tradingeconomics.com, the United States unemployment rate. And I'll go down here, and we can see that for April, it was 4.2%. For March, it was 4.2%. For February, it was 4.1%. And for January, it was 4.0%. So all very, very close, 4.0 to 4.1%. And the article reads here, the U.S. unemployment rate was at 4.2% in April of 2025, the same as in March and in line with market expectations. The number of employed individuals increased by 82,000 to 7.165 million, while employment grew by 436,000 to reach the 163.944 million. The labor force participation rate also edged up to 62.6% from 62.5%, and the employment population ratio to 60% from 59.9%. Additionally, the U6 unemployment rate, which includes those marginally attached to the labor force and those working part-time for economic reasons, decreased to 7.9% from 7.9% the previous month. So, as we take a look at this here, this is the unemployment rate. It's asking, will the unemployment rate be above expectations? Yes or no? What if I say, oh, you have to log in? Okay. just seeing if it'd give us some real-time answers here if we clicked one. Okay, next is the inflation rate. So let's go ahead and take a look at this. And we can see for April here, as we look at this chart, this is a 12-month chart we're looking at. And in April of 2024, it was 3.4%, and then declining down to into September at 2.4%, then rising to January of 25 to 3%, and it's been declining every month since, and into last month, at which it had the unemployment rate, or excuse me, the inflation rate at 2.3%. So this is from tradingeconomics.com, the United States inflation and consumer price index. It says the annual inflation rate in the U.S. eased to 2.3% in April 2025, the lowest since February 21st, from 2.4% in March, and below forecasts of 2.4%. And so I think what's very interesting here is this is the lowest rate of inflation in more than 4 years. That's pretty substantial and pretty significant. So let's take a look at the 5-year marker. So here we are at 2.3, and we have to go all the way back to, here's March of 2021 at 2.6. So this is the lowest it's been since March of 2021, which is pretty incredible. And right before that, 1.7, 1.4, 1.4. Okay, and we can see here we're at 2.3. So all things indicating positive. So hopefully what that means is the cost to buy stuff is staying relatively stable, despite, some of the things that are going on and what we're seeing with some of the tariff conversations and things that are going on. I think all things stated, this is interesting data to take a look at to show that, well, inflation, it's actually going down right now. Again, we'll see what happens in the coming months, but see if this trend continues. But as a whole, it looks like it's leveling off and maybe continuing to reduce a bit here. Okay, next up is we're going to take a look at the survey of consumers, which is a consumer sentiment, or they have an index of consumer sentiment that we take a look at. And if this is a 10-year report, this is put together by the University of Michigan. And what we see here is that for this most recent month, April, that it's showing here, we had a steep decline in the consumer sentiment. And I would imagine that largely has quite a bit to do with the tariffs getting implemented in April, and seeing what goes on from there. In my opinion, I think that this tariff stuff is still pretty early on for us to see what's going to happen, if there's going to be any real lasting or significant impact from it. We'll see if it's just a short-term blip, or if this is more of a long-term thing. It remains to be seen. Certainly we want to watch and monitor it, but it looks like a lot of the topics and conversations, at least what's transpired so far from it getting implemented in April through today, that a lot of these continue to get eased and relaxed as hopefully some trade negotiations and trade deals are continue to happen here. So you can see it bottomed out here in the middle of 2022, and consumer sentiment started steadily increasing for the last almost 3 years, and then really fell off here. So we'll see if next month or the month after we see a big rebound, if the tariff thing calms down, or there seems to be some improvement there. But it'll be interesting to see. Generally, what this would indicate, at least as I look at this and how you can interpret it, is that some folks are going to say, well, it might be harder to be selling your product or service today, that it's harder to get to a yes. Some people are concerned about it. I would say, for people that are looking at maybe buying a franchise or purchasing something, especially a substantial purpose, now might be a time where there might be an opportunity or a potential deal to be made, depending on what you're looking at doing. I can tell you on our franchise front with clients that we've worked with, just today, I had a client email me, and I'm not even making this up. She emailed me and said that she sold her first franchise, and it was a multi-unit purchase for her very first one. And I had a client just a week or two ago email me and tell me that they just sold their first franchise as well. So we're definitely seeing some activity happening. So we'll see where this transpires, and obviously those are some anecdotal cases, but still interesting to see that first franchises are happening and are being sold. Okay, now we're going to take a look at business formation statistics. This has become one of my most favorite reports, and it says this is for immediate release Wednesday, May 14th from the United States Census Bureau, and they released new business formation. So here's zoomed in statistics of this. And on this chart, you can see that it shows that the total U.S. business applications for new business filings for April of 25 was almost 450,000 new businesses started. So 449,508 new businesses across the country, with 156,170 of them considered to be high propensity businesses. So all of that to me continues to be a great sign, especially if you're in franchise development or new franchise recruitment efforts. You can see here the interest in entrepreneurship and self-employment is high, with all of these new businesses continuing to be formed. So I think it's just a reminder that while there may be economic conditions and things going on, so much that's happening here indicates to me the behavior is showing that people are starting businesses. So if in my opinion, anyone you're speaking with that has about your franchise, I think you have to assume that their interest is serious for opening or starting a business right now. Okay, next up is the Small Business Index Q1 report. This is presented by the U.S. Chamber of Commerce and MetLife. And the summary and highlights here is that inflation remains top concern as revenue worries grow. So it says on the side here, 58% of small businesses say that inflation continues to be their biggest challenge. And the small business index score for 2025 reduced a little bit. So you can see Q4 actually, if you look back to last year, Q1 of 24 was 62.3, and Q1 of 25 is 62.3. They are an identical number. And so interesting to see that we had a nice little rise in throughout 2024, and then it's kind of cycled downward here. So we'll see if this continues to be a trend or if it pops back up in Q2. It says 57% of small businesses say that their recently hired entry-level employees are prepared to enter the workforce. I think that's interesting. Okay, next up is the Vistage CEO Confidence Index report. And this reads, the Vistage CEO Confidence Index is calculated from responses to a set of 6 questions about the current and future state of the U.S. economy, revenue and profitability projections, and hiring and investment plans. Measured over time, the index reflects trends in the U.S. economy and leads both GDP and changes to employment. So if we look at the last 5 years, we see Q1 had a big drop to 78.5, and it's the lowest level since Q3 of 2023. So that's been about a year and a half it's been since it's been that low. And Q4 was one of the highest numbers it'd been since 2020, Q2 of 2021. So a couple of things I wanted to take a look at is the confidence index components, okay? And the components, take a look at these 6 questions. And so it asks about overall economy compared with a year ago. So it's showing that 59% is either neutral, has no opinion, or positive. The one I really want to take a look at is you see that the overall economy from these responses shows 41% negative, 42% negative. But what I found most interesting on this report is sales revenue. And the question is, do you anticipate that your firm's sales revenues will increase, remain about the same, or decrease over the next 12 months? 58% of the respondents said they expect it to increase, while 25% said neutral and only 15% said negative. So I consider that interesting because only 15% of these executives think that their sales are going to decline, but 42% of them expect that the future economy is that the conditions are going to be are not going to be better than they are now. So I find that very telling. So while they have this general overall prediction for the broad market, they think, well, it's not going to be as well, where it's closer to that. But 58% said, oh, well, actually, our sales are going to increase. So I think that, to me, is a more telling sign or indicative sign of what are they really, truly thinking, especially as it relates to their business. So to me, that's a very interesting takeaway off of these charts. Okay, this is the 2025 Small Businesses report from Guidant Financial. They do an aggregate and they take a look at the top industries in 2025, small business plans, top states for small businesses, and they look at the small business types. So in their report, in their funding and inquiries for 2025 business types, they found that 35% of the people they're working with are new franchises. 29% are existing independent businesses. 27% are new independent businesses, and 10% are existing franchises. So it's showing 45% franchise of some kind, and 55% are independent businesses. So I think that's really interesting with what Guidant is showing here. And to me, indicates that if you're in need of finding something for your business, Guidant certainly would have some type of solutions for franchise or independent. And the top states for small business, it's showing 12% in California, Texas at 9%, Florida at 8%, and Georgia at 7%. And then the last piece here is to take a look at franchise insights. So it looks like they've stopped really updating or continuing to update their website with all of this, and they're publishing a lot on LinkedIn now. So let me pull up this recent post. And it says, the question that was asked on this report, it says, how familiar were you with the franchises you inquired? I get lots of complaints from clients in reference to some of these franchise lead aggregators and these franchise portals. And what I find interesting from the data that Franchise Insights shares is when they ask these questions, this is, to me, always a little surprising because it says 46.7% of the respondents said they were completely unfamiliar with the brand. 36.7% said they were vaguely familiar with the brand. Only 10% of people said that they were very familiar, and 6.7% said that they were already somewhat familiar. So we're looking at this 16.7%, or if you want to round up for simple, easy numbers, about 20% of the people requiring, just for the 80-20 rule here that applies, roughly, it's a little less than that. It's 16.7%. Said that they are familiar or have some familiarity with the brands they inquired. Vaguely familiar, to me, might as well be as really unfamiliar. And then 46.7%, almost half, are completely unfamiliar. So to me, this is the sentiment and reminder that If that's the case, that means if I were to apply these averages across the board, that means about half the people who'd be inquiring about your franchise likely have no understanding of your business. They don't understand it, they don't know it, they're not familiar with it, which is a great opportunity for you to help educate them, to show them what that looks like. Let's see if I can get one more here. Um, Uh, this one's good. So it asked, and this was published on March 4th. It said, March 4th of 2025. It says, entrepreneurs agree now is a much better time for their startups than 3 months ago. So 77.8% in March said that now is a good time to start up a business. So let's see here. So that's our session for today. I'd love to open this up to questions from any of our attendees here to see if you have any questions, anything specific you'd like to share, talk about, or request before we close this out for another solid session here. All right. Well, I'm not seeing any questions come through. I just want to thank you all for being here today and wish you all a very happy Memorial Day coming up on Monday, and happy Memorial Day weekend. Let's remember those soldiers and loved ones that we've lost, who have served our country in battle over the years. So thank you all for being here. Happy Memorial Day. Have a great week, and we'll see you soon.